Thank you for joining us today. My name is Steve Wolfenbarger, and I'm the Education Manager for AHOA. As we continue our series on the impact of the hospitality industry due to COVID-19, we're happy to have industry expert that many of you already know, Tarun Kapoor, Managing Director of Kapoor and Kapoor Hospitality. Today is the fourth part of his five-part series on a ball game. Today we will do what it takes to learn more about revenue, expenses, and restoring your bottom line in a post-COVID era. Now, before beginning, we ask that you please take notice of the following disclaimer for all of those listening to this presentation. There will be a Q&A available at the end of the presentation. For any questions you may have, please type them into the question section. We encourage you to take advantage of this opportunity to ask what is on your mind, and don't be shy, but please note we may not get through all questions during our time. Also, we will make today's presentation available for all within 24 hours on our COVID-19 resource page. We're excited to have you all here today, so let's get into the conversation. Now, Tarun, in your other sessions, you talked about the owner GM being the head coach, chief culture officer, and the chief strategy, about them being the chief financial officer or the CFO. Now, when I hear the title CFO, I naturally think of large hotel companies and not a hotel GM owner. Can you explain that a little bit?
I can, Steve, and hello, and thank you for having me back. Before I answer your question directly, let me sort of explain why I use these multiple chiefs in this metaphor. And really, the metaphor is a juggler's metaphor. So imagine a juggler who's juggling 5 or 6 balls, and the minute one ball drops, the act is over. So as long as the balls are in the air and the juggling is effective, the juggler has got an audience. So I see the general manager and or the owner of the hotel in this juggling metaphor, which is you've got to be good, but you got to be good in many things. You can't be good in just one or two things and forget about the rest. So we talked about uh, being a culture, in charge of the culture of the company, the hotel. We talked about being in charge of the strategy of how you're going to be successful from a marketing standpoint, from a revenue standpoint. And now today we are talking about a chief financial officer. So first and foremost, let me set the stage by saying it doesn't matter to me whether you are a general manager or an owner. But it does matter to me that as the general manager or the owner, you are in charge of this asset. So think about this not as a hotel that has 60 rooms or 120 rooms or 200 rooms. Don't look at it as a hotel that's doing $1 million in revenues or $4 million in revenues. Look at this as an asset and say this hotel is worth 12 million or 20 million. It's an asset. And what I'm giving you, if I was the owner of the hotel and you were my manager, I am giving you $20 million to take care of. And what I'm asking you to do is if and when you leave your role as GM, you don't give me back an asset that's worth $20 million or an asset, God forbid, that's now worth $19 million. You actually give me an asset that's worth $22 million or $23 million. So you've grown the value of the asset. And while you've grown the value of the asset, what you've also done is given me profit every year, every month. And as long as the revenue stream coming in is high, and as long as the expenses are well managed, you're going to be giving me a profit margin, and that profit margin will pay for or be, if you will, the return on my investment, the money I put into buying this hotel and get a loan on this hotel, etc., etc. So as the chief financial officer, it doesn't matter if you're a small hotel or a large hotel. The function of what a chief financial officer does, which is appreciate the value of the asset and provide cash flow and provide profitability on a continuous basis, a consistent basis, is what I think a chief financial officer is responsible for. So, if you remember one of my earlier sessions, I mentioned the same thing. I think when you manage your time, I think when you manage your week, I think when you manage your month, you should consider allocating time during that day, during that week, during that month that allows you to perform the functions of this chief financial officer, because the smaller you are as a business, the less specialized people you have, so you have to perform multiple functions or in effect wear multiple hats. So I don't know, Steve, if I answered your question directly, but I think the function of a general manager is to perform the functions of the chief financial officer, amongst others. So I'm not sure
Absolutely, absolutely. I think that's great. And you're right about timing.
You are fading out,
Sorry
Steve.
about that.
No worries. So I think I'm just going to take over and keep talking till you tell me to stop. How's that? So I think
Okay.
in this capacity as as the general manager or the owner who's also serving as the chief financial officer of the business, I think I'd like you to think about three different functions that you have to be managing. One is the function of managing the cash flow. And what do I simply mean by managing the cash flow? Well, how much money is coming in and how much money is going out and how much money ideally is being left after all your bills have been paid. So think of this in your own personal household. If you're bringing in a salary of $5,000 or $6,000 or $10,000 a month, and after taxes, you may be getting out of that $6,000, maybe $4,000, and now you've got $4,000 to pay for your mortgage or pay for your rent and pay for your utilities and pay for your food, and also keep some play money for yourself and your family. And maybe, just maybe, if there's anything left, you can put that into a savings account, right? So cash flow management is money coming in and money going out, and hopefully saving some at the end to put into a savings account. The second function that you have to perform as the general manager is the financial reporting function. Now, what's a financial reporting function? Well, this is saying what was my income or my revenues for the month, what were my expenses for the month, and at the end of the day, what was my profit and loss for the month, and which expenses were higher or lower, which revenues were higher or lower, and why. So if you can look at the financial analysis piece, which is understand your profit and loss, understand your income statement, then you know whether you're making profit and you know whether you're on target. The third piece was the piece I was talking about, this asset piece, which is the balance sheet, which is, do you know what your asset is worth? Do you know how much debt you owe on these assets, what your liabilities are? And hopefully the difference between the assets and the liabilities is a positive number and a continuously growing number. So imagine this. Imagine that I am an owner operator. I'm coming to you and I'm saying, do you want to join me as an investor in my business? And you say yes. And I say, I need $500,000, and you give me $500,000, and I take your 500 and I take my 500 and I put this money into the equity and we buy a hotel. Well, what you're going to be expecting from me for the 500,000 that you gave me is a return on that money every month. Because if you took that $500,000 and you put it into stocks and bonds, or even put into a savings account, which is not paying very much currently, but if you put into some of these different options, you expect a monthly income on that $500,000. And let's hypothetically say you're expecting a 10% return. That means you're expecting $50,000 a year on that $500,000 that I have to give you. And if I don't give you that $50,000 a year, you are going to think twice about investing with me in the future again. So I need to make sure that I can give that return on your investment. And in addition to returning your investment, I'm also paying the mortgage on the hotel. And as I pay the mortgage on the hotel, I am continuing to increase the value of the asset, because my principal payment that I'm paying is going into like a savings account. And I may have owed $9 million last year, and this year I now owe maybe $8.5 million, and I'm slowly chipping away on the mortgage, and I'm creating net worth in this asset. So not knowing where your money is, not knowing where your money is coming from, not knowing where your money is going, means all you're doing is spending your time in running the hotel without understanding whether you're actually growing the value of your hotel. So just today I was visiting with another client, and we were talking about budgeting. So think about a budget as a very necessary tool, because what does a budget do? It tells me, or it allows me to consider what I am forecasting as revenues for each month next year in 2021, and what I'm planning to spend in expenses for running my hotel each month, and then how much profit or loss I'm hoping to make. Obviously, if I was going to make a loss or anticipating making a loss, well, the bank is going to say to me, why are we lending you money? Why are we working with you if your budget is showing you're going to lose money? So clearly we need to show that we are going to make money, and the budget is this plan that helps us helps us know where our money is coming from and where it's going. Now, in COVID, I suspect your market has gone upside down. I suspect the typical market segments like your business travel has almost died. In most areas, it's almost dead. And it's been replaced by staycations and local travelers who may be coming in and getting tired of being locked up at home with their families. So they're going out and staying in hotels and maybe enjoying your pool or enjoying other facilities in the hotel. So the market segmentation in your hotels is changing. Assuming that's true, the margins in those market segments may be different. The ADR may be different, and as a result, your RevPAR may be different. Now, not only is the segment changing, the forecast changing, the revenue changing, but also then your expenses have to be managed in proportion. And if I have budgeted, let's say, $1 for linen costs per occupied room, or 50 cents per occupied room for, let's say, guest amenities or room cleaning costs, etc., then I can anticipate what expenses I'm going to incur for the occupancy I am having. So this idea of a chief financial officer is really coming down to simply saying, am I keeping my eye on the ball when it comes to revenues coming in and when it comes to expenses going out? Does that make sense? All right, Steve, do I still have you in, or should I keep going?
Steve had some technical difficulties, so you have me, Tarun. This is Kristen, and that totally makes sense. You've talked about communicating with staff as to what is happening. As the CFO, should you show them how you are making changes and how it impacts the bottom line?
Well, Kristen, that's a beautiful question, and absolutely. So let me put it to you this way. If I was simply telling my employees, cut costs, don't spend this, don't do that, they are going to look at me from a very negative perspective, and they're going to say, all this guy wants to do is cut, 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 cut. And as a result, working for me no longer becomes an enjoyable experience. If, however, I can show you from the profit and loss statement, or I can show you from the cash flow statement that my money predicament is not very healthy, then all of a sudden you become a team member of mine and you participate and you understand why I'm saying cut costs. So let me give you some simple some examples to what I just said. So imagine if you are going to be paying your elevator service bill. And let's just say this elevator service bill is $300 a month. For the whole year is $3,600. And let's say the elevator company sends you a bill for $3,600 and you cut a check and pay them $3,600. Well, if you cut a check and pay them $3,600 in the month of December, when it's a slow month for you, there's not too much money coming in. We are still facing the lockdown and the COVID, et cetera, et cetera. So really, I don't have $3,600 to pay. But yet I know it's really $300 a month. So I may have to write a check because my vendor expects it in December, but I'm going to take that $3,600 that I wrote a check and I'm going to spread it out and show it in the profit and loss of December, January, February, March for all 12 months. So from a cash flow standpoint, I got hit with $3,600 that I had to pay in December. But from a profit and loss standpoint, I have spread that cost out over 12 months. Now, when the bank sees that, the bank's going to see $3,600 having gone out in the month of December, and maybe my tax returns for the month of December are not in good shape because I paid $3,600. But when I show them the profit and loss and how it was really paying for 11 months into next year, they start to now say, well, okay, Tarun is managing his money well, and he is not being very wasteful of his money. So did that sort of answer your question, Kristen?
No, that answered my question perfectly. Our next, going into basically the last question, into what you're explaining with money, what financial planning should a GM be doing?
So I guess the biggest financial plan that a GM or an owner operator does is a budget. So think about the budget in two separate ways. One, the budget is a forecast. It's a forecast really by day, by month, and by year. And it is saying, this is how many rooms I expect to sell at this rate in the month of January, on January 1st, January 2nd, January 5th, January 15th, January 31st, etc. Now, if I'm going to be selling 100% out each night, or I'm going to be selling 50% out, that's good information. But what's more important to know is who's coming in for those 50 rooms or those 100 rooms. Which segment of the hotel traveler is coming in? Are these families on vacation? Are these business travelers? Are these government employees? Are these sports teams, etc.? Who are these groups? Because each of these groups, you are packaging a different package for them. They are paying a different price, and their cost to the hotel is a little different. So for me to be able to manage my expenses, I need to know who's coming in and what percentage of the rooms are they taking and what rate are they offering. So first piece is in budgeting is forecasting the revenues and forecasting the rate for each of the segments that are coming in. The second piece in the budget is the line by line management of expenses. How much money am I going to pay on housekeeping labor? How much money am I going to be spending on laundry labor? How much money am I going to be spending on front desk labor, on maintenance and engineering labor, on breakfast? How much money am I going to be spending on linen replacement? How much money am I going to be spending on laundry expenses, on room cleaning expenses, on preventive maintenance, on deep cleaning, etc., etc. Now, if you take each of these expenses, excuse me, and if you allocate how much per occupied room you should be spending. In other words, every time a customer checks into a room and checks out of a room, I have to replace, I have to clean the room, I have to replace all the linen and dairy, I have to put in new guest amenities, and what are all of these things going to cost? Each of these things have a tangible cost, so it's possible that the cost per occupied room for just guest amenities is running at $1, $2, $3 a room. It's possible that you, excuse me, that your room cleaning cost is costing you X per room. The labor cost is costing you X per room. And if I know those numbers, then I can track those numbers, and then I can make sure that my department employees, managers, supervisors are all very conscious of those expenses. So if they can look at the expenses, they can look at the revenues, then they know what at the end of the day, how much money is going to be left to be able to pay mortgage payment, which is the principal and the interest payment, and to be able to pay any income tax, assuming you've got income at the end of the day. So if as a general manager, I am unaware of any of this that I've said, this budgeting, which is the planning piece, and then the profit and loss statement, which is actually what happened compared to what I budgeted, and if those two are the same or close, then we are managing and are conscious and aware and managing our expense as well. If there is a variance between what I am budgeting and what's actually happening, that's telling me is that somebody, whether it's my managers or my department heads or my line employees, who are not necessarily following the rules, following the systems, following the processes as we had outlined, so they're not meeting their budgeted expenses. So then you can tell them what needs to be done, and they can see why you're telling them, and you don't just become an unreasonable, demanding employer. Does that make sense?
Yes, that makes a lot of sense. Going back to the top of one of the answers you said about budgeting is basically forecasting. As we know, 2020 has been an unusual year. In the past, I would forecast quarterly. Do you think we need to change that going forward?
Oh, Kristen, absolutely. Budgeting in many ways was a way to plan for next year and then use that as a static document to say, I expected you to give me $4 million in revenues. I expected you, after all expenses, to give me a net operating income of $1 million. But in reality, you haven't even given me $3 million in forecasted revenues, and you're not giving me even $500,000 in net operating income. So if COVID has taught us anything, it has taught us that right after March, when COVID hit, everything went upside down. And it went upside down due to no fault of any of my employees or my managers or myself. The market just happened. COVID just happened, just took over. So now the question is, if I was running everything like a static organization, I would still be staffing it the way I was staffing it before March. I would still be buying things the way I was buying things before March. But in reality, to survive COVID, what we've all had to do, and we've done it very well, is we tightened our belt, we laid some people off, we cut down our hours, we cut down our services, we even shut down areas of the hotel to be able to survive this. So yes, the budget can't be static. The budget must be fluid. So I always say, in this COVID era, at least once a month at the last, let's say around the 20th or 25th of December, we should be looking at whatever we forecasted for January of next year and say, is that still relevant? And if it isn't relevant, we have to change, tweak, adjust that forecast. And likewise, when we tweak and adjust the revenue forecast, we have to then tweak and adjust our expense forecast. So if you had asked me a year ago, I would have said, let's make a budget for the year, month by month. Let's update the budget 1 week before the start of the month. Now I am saying to you, update the budget 1 week before the start of the month, but actually update the budget on an ongoing basis every 10 days, every week. So you're constantly adjusting to the market changes. If you are like what happened in California, just last, I think, Sunday night, effective Sunday night, the entire, more or less 90% of California has become a stay-at-home state, which means we can only go out for emergency use. So there are no restaurants open, there's no movie theaters open, there's no hair salons open, only grocery stores and even retail shops can only take up to 20% of the capacity. So people are staying at home. So obviously, hotels' occupancy from a week ago to today will probably be dramatically impacted by just the stay-at-home order that the governor put out last Sunday night. So forecasting has to be much, much more fluid, and cost controls have to be much, much more fluid.
Great, thank you so much. That was awesome, Tarun. We have an audience question. I want to ask this because it's actually a really good one, and it ties into forecasting and budgeting. It says, how do you prioritize which comes first? Cash flow statement, daily reports, balance sheets, etc., in regards to forecasting and budgeting?
So I don't know if I can say which comes first from a priority standpoint. I think I can say which comes first from a how to be an effective CFO standpoint, if that makes sense. So first of all, if I don't know what to expect in the next week in terms of revenues, I cannot manage my expenses correctly. So the first thing I think we have to do is continuously update our forecasted revenues and try to get that science of being as accurate. What will next Monday look like? What will next Tuesday look like? What will next Wednesday look like from an occupancy standpoint? And then be able to say, am I staffed for it? And do I have the necessary supplies for it? So purely from a customer experience standpoint, forecasting allows me to make sure that the customer experience is being serviced to their expectation. But then the second piece of this is not only have you forecasted correctly, not only have you planned your operations correctly, you now actually have to be on top of your operations and make sure that you're not having any unnecessary expenses. So this is where the cash flow comes in. If I know that this is December, and December is the month in which I have to make my $3,000 elevator bill is going to come for the whole year, then I need to have money in the bank to be able to pay that check. I can't call the vendor up and say, sorry, I don't have money in the bank. Can I only pay you 1/12 of it? They're not going to accept it because that's the way they priced it out for you. So from a cash flow standpoint, I have to make sure I've got money to pay my bills, even though this is going to, if I pay for it in December, it's going to have me covered all the way through next year. So I think the forecasting comes first. I think the cash flow management is working in partnership with that. And then at the end of the month, if you have made your mortgage payment, what that mortgage payment has done is increased your savings account because you have now paid some of the principal amount in along with the interest, and the principal amount has increased your balance sheet. It's increased your assets in your balance sheet. If, however, because of COVID, business is so down that you have negotiated with your bank to say, can you not take my principal for the next 6 months? Can you only take my interest for the next 6 months? Then you are not going to be increasing your asset value, which is the ultimate piece, but you'll be paying your expenses and you will be current. And hopefully there may be some money left over from a profit and loss standpoint where there's a certain amount of profit that you can have. Kristen, did that answer the question?
Yeah, I think that answered the question. So some of us was caught short-handed because of COVID. What are your thoughts on how we should diversify our profile so that we're prepared for the next crisis that happens?
So if the question is, should we diversify our business portfolio outside hotels so that we are not complete, have all our eggs in one basket, if you will, I think that's just a normal, good business decision to have. However, you also got to look at your company, and you got to look at the bandwidth of your company and look at the capacity and capability of your company. So if you are a one-person show and you've got your eggs into, let's say you've got a 7-Eleven store, you've got 1 or 2 hotels, and you've got 1 or 2 restaurants, I think COVID probably hit the restaurants and the hotels equally as bad, but probably didn't hit the 7-Eleven quite as bad. So I think diversification is good, but you also got to balance diversification with your own capability to be able to manage a diversified portfolio.
Great, that's really good advice. And a last question we have before we wrap this up is, we took a PPP and currently working to get it forgiven. Should we let staff know that or keep that internal?
So if the question is, should you let your staff know that you received PPP money? My inclination is yes, they should know. But I think a bigger question really is the PPP money that you may have applied for, and hopefully there's some more coming in this next bailout that happens. But in your previous PPP money that you gave, a lot of my clients had furloughed their employees before the PPP money made it to their bank. And when they call the employees to say, do you want to come back? Many of those employees chose not to come back, and to be able to, because they were making their unemployment, plus they were making, remember, the $600 a week in extra in payment. So they were making more money than they would have made if they were being paid through PPP. So what a lot of those companies, small businesses who've made that PPP money, are hoping that when the time for the waiver comes in, that they will be allowed to have spent that PPP money for a longer period of time, in which case it paid for fewer employees who ran the hotel, but over a longer period of time. So that's, I think, what the jury is still out, whether that will happen, but I think that's what everybody is counting on.
All right, thank you. And before we go, Tarun, I just want to ask you to just summarize a GM owner as a CFO, basically, of how they merge together and what you see them generalize, doing in a hospitality capacity.
So I called my GM the Chief Operating Officer of the hotel. What does that mean? They have to run the hotel to the best of standards, whether it's the brand standards or the customer expectations, or whether it's my company standards. They have to run it from housekeeping, front office, maintenance, customer service. All of those things have to be run perfectly well. Chief Operating Officer. They have to be the Chief Strategy Officer, the person deciding which market segments am I going to go after and why, what rate strategies am I going to put in and why, if I am a Marriott hotel, if I'm a Hilton hotel, if I'm an IHG hotel, accordingly, how do I fit into that brand's concept and strategy and revenue. I look at my general manager as the Chief Financial Officer. Ultimately, you are responsible for the profit and loss of the hotel. You're responsible for the asset appreciating over a period of time, and you are responsible for cash flow management. So these are, remember the juggler analogy I used at the start of the session today? These are all the different balls that you are focusing on. Some of you may be better in one thing, or you may be more comfortable with operations, or maybe more comfortable with the accounting and finance side of things. But really, at the end of the day, to be a successful general manager of this asset, of this $20 million piece of real estate, you've got to be able to juggle all these balls. And that, Kristen, is the summary.
Thank you so much. I appreciate that. So thank you again, Tarun and Kapoor Hospitality, for this informative webinar and for everyone that joined us today. Please tune in next Tuesday, December 15th at 3 p.m. for the 5th and final of this series, Getting Back to Business. I want to win the ball game. The owner, GM, as the hotel's Chief Informational Officer. Feel free to check out the AHOA COVID-19 resource page on AHOA.com for future webinars and also for past webinars we have done. We hope you have a wonderful day, everyone, and hope to see you all join us for future webinar and AHOA's events. Again, thank you, Tarun. I can't wait until next Tuesday to hear about Chief Information Officer.
Thanks, Kristen. You folks, thank you very much.
Bye. Have a good one.